273. You get the Nasdaq up 59. S&Ps are up by 12. Let's go over to our man, Mr. Teddy Kekstadt, as we do each and every Wednesday at 40 past the hour. And the only people working in Chicago, folks, today are the traders. There's no doubt about that.
And those people lighting the tracks on fire for the trains.
Lighting the tracks on fire. We just got... and listen, folks, you can reach Teddy every trading day at forex-trading-unlocked.com. Teddy Kekstadt, hey, listen, we just got a text, right, from another trader in Chicago. He showed us a picture of the trains. There's no one on the trains coming in.
Oh. And they also cut the schedules. There's not many trains running today, period.
Okay.
I don't blame him, man. We were talking to Kevin Hinkstead and Ameritrade. They're lighting the tracks on fire, man, just to keep things running. Then we see that even no one's even on them. I can't blame him, man, right? It's like, my goodness, stay safe out there.
Cold. So, hey, currencies, like, you know, what's going on with this yen and the Nikkei, man? All the other ones are going with me. This yen, man, is just hanging at this 109.61, man.
Yeah, I think, well, the Nikkei has been kind of choppy, and it's been holding up the same, pretty much like we've been talking about. It's been just following that Nikkei.
Yeah.
You know, so, and the Nikkei, like, there's a dollar rally obviously going on right now, so that's kind of helping it. But then you have the Nikkei, which is a little bit sluggish, even though the rest of the markets have kind of narrowed right now.
Yes.
You know, so I think that it's hanging on their stock market right now.
I know. It's hard to tell whether the yen moves the Nikkei or the Nikkei moves the yen. Do you know what I mean? It's like, we know that the Nikkei cannot stand a strong yen, folks, okay? It takes conniptions, and dives down pretty quickly. So the pound, I mean, it's pretty amazing, right? That pound, right after the vote, 126, or at 130.71 right now.
And they're strong today, considering that the dollar is actually starting to push on all the other currencies in the wake of that vote, or what went on yesterday. And I didn't go over all the details, but it does look very promising that the legislative part of Parliament rather wants to work on the exit deal.
Yeah.
You know, so I think that in lieu of that, there's not going to be as much resistance, and especially with all the EU numbers that have been coming out, with them downgrading their forecasts. I mean, you had the German GDP downgraded to 1% for 2019. So these are issues that I think are going to help the bargaining between the EU and the UK start to move a little bit smoother, because they're worried about a slowdown.
Yes. You know, there's no doubt about that, because I was looking, and I had brought it up a couple times. It's like everyone, it seems, that kept saying that, okay, what about the UK? And I start thinking, I mean, the UK is a powerful, country. Well, what about the rest of Europe? Like, if the UK is breaking away too, it's not just the UK that's going to get hurt. I mean, if it's a hard Brexit, do you know what I'm saying? It's going to be that collectively they're all going to get hurt. So they got to figure that thing out, man. The euro looks like it wants to catch a bid. We're real close on the euro. If that euro can move, man, then we got some action.
Right, I agree with you on that one. The euro is definitely really tight, especially with the FOMC meeting. So, but then I heard you guys earlier talking about the 10-year and the interest rates right now. Like, it's just crazy how they're the one market right now that's very strong. That I was surprised in going into this meeting. I thought that they would be a little weaker.
Yes.
So that's with the dollar being strong, the interest rates being strong. It's a very quiet, sleepy market today. But that's odd that those two markets are bid basically. Right?
And one of them's going to give it up. Right. Exactly.
Yes.
Yes. Teddy, I really like, it seems that the bond and note market seem to give the most consistent amount of information, and it's so deviant because, for so long everyone has really thought that rates have to go up. And it's like, this hasn't broken a trend line since 1980. It's like, well, I understand. I was in that camp like 7 or 8 years ago that, hey, they have to go up. And then I realized that, well, I guess they don't have to go up.
Sure.
Right. Well, remember we were talking a few weeks ago how there was a little inversion between the 2-year note and the 10 and the 30-year note.
Yes.
And now all three are pressing new highs, or on short-term new highs. Excuse me.
Right. Pretty amazing, man. So we got 2 o'clock today. We'll see how Powell's going to basically spread the gospel, And I'm not quite sure. I mean, the Fed Fund futures are saying, hey, listen, we might have a short-term 25 basis points like 6 months from now, but that's only a 25% probability of that. So
I'm really saying we're not, right?
Right. Right.
Sure. Well, the pound Swiss now, you got them pressing parity again. Let's see if they can close above that today.
Okay.
You know? So I think that's a nice, that's another indicator. But I think this dollar rally still is something that's going to run out of gas. I think we're going to get through this Fed meeting. We're going to get into the end of the month. You know, we have all these earnings that are coming out, and then I think it's going to get the dollar is going to get deflated again.
Yeah, no, that on the index, that 95,830, they've been battling over it since October 24th, and it's under it now. You know, we'll see if we can stay under it.
Yeah.
Okay, well, listen, man, you stay warm. It's always a pleasure. We appreciate the update. And, folks, every trading day, you can check them out at forex-trading-unlocked.com and send them a few blankets.
Yeah. Thanks, guys.
Teddy, thanks so much, man. Have a great one. Have a safe one.